Hey, welcome back, folks, to Dirty Boots Capital. I'm your host, Tony Lopes, and today we have an amazing guest with us, Dale Wills. And I'm just going to read his bio off because I don't want to miss anything. So he's a real estate developer. He's been in the industry for 25 years. More than 25 years. He's the owner and founder of Centra Companies, and he's overseen development of more than 1,500 homes. I mean, that's pretty impressive right there, 1,500 homes, with a value of more than 500 million in project value. He's established Centra Capital Partners, a real estate syndication company, partnering with accredited investors to build wealth through ground-up single-family home developments in the Midwest. Dale, welcome to Dirty Boots Capital.
Thanks, Tony. I'm looking forward to the conversation.
As am I. I mean, how did I do on that intro? Did I screw anything up? I mean, you're involved in so many things.
No, you did great. I always get a little uncomfortable when I hear it. It's my team puts that together, and they're kinder to me than maybe I deserve.
No, you're doing great things, and this is why we have you on, because you have the background and you have perspective of what the audience is looking for. And my audience, we talked a little bit about it before I hit the record button. My audience, to a great degree, they're seeking more freedom in their lives, right? And to be able to have more freedom, to a certain extent, you need more wealth in your life to get more freedom. And how do you get more wealth? Well, a lot of us have done it through real estate investing. So that's kind of like the audience that we have here. And that's why folks subscribe to this channel. And if you're listening and you're watching and you haven't subscribed, please hit that subscribe button. It does mean a lot to us. So thank you very much. So Dale, I want to get started. I was doing a little bit of research this morning, knowing that I was going to be chatting with you, an insider in the housing industry. I was looking at some different sites, and I was getting anywhere from, we are short somewhere between 4 million and 7 million homes in the United States. So we're short somewhere in that range, 4 million to 7 million. Oh, okay. But the problem becomes affordability. We can build $1 million homes. Ain't nobody going to buy them, right? Or very few select, right? There's a sweet spot we need to be building in. We need to provide affordable homes. So how do we close this gap of 4 million homes? How do we close that gap in the face of interest rates, right? I just looked at a 30-year interest rate. It's pushing 7% in the face of inflation that we've seen recently, in the face of what I'll call wage stagnation. Yes, we've seen some wages go up, and that's good, but they're not going up as quickly as inflation, as the cost of goods. So wage stagnation is a problem. So if you could kind of help us understand housing affordability, what you guys do, and how you combat some of these problems that are headwinds.
Yeah, it's a tough one because there's so many different stakeholders involved. Inflation, as you've pointed out, has a huge effect on it. Interest rates have a huge effect on it. Building codes have a huge effect on it. City, county regulations have a huge effect on it. Federal regulations. And there's so many stakeholders. And part of the challenge is all of the stakeholders recognize there's a problem. All of the stakeholders want to fix it, but I'm not the problem. Therefore, you need to fix it. And that really is the biggest problem is I'm a watershed district and I'm going to make you go through all these applications, and it's going to take a long time to get through, and it's going to be very costly, but that's super important because I need to protect the waterways because that's my responsibility. So there's not much I can do it being over the watershed, but you, as one of the other stakeholders, you can fix it. And that's kind of what we're seeing is nobody wants to own the responsibility of it, is because the area in which I have responsibility, we're doing exactly what we've been commissioned to do. And so everybody else needs to fix what they're doing wrong. And so I don't know from that standpoint, I don't know that there is a fix right now. I don't know that there is a solution right now. And so we look at it, we say from a company in every aspect of life, you say, well, what is it that I have control over? I don't have control over the watershed districts. I don't have control over the state legislature. I don't have control over any of these entities. Now, yes, we can have some influence. Yes, we can go and talk about legislation and try to influence for the good. But what do I really have control over? For us, it's, well, how do I build houses more efficiently? How do I build them so they're more affordable? And that's where we're putting our energy, because if we're short 4 million, 7 million, whatever it is, I'm with you. It's like everybody has a different number, but I think everybody agrees it's a lot.
Yes.
4 million is a lot, 7 is even more, but either way, how do we fix it? And as we think about, we all know the funnel analogy, you have a funnel and the top of the funnel is the widest point. And so how do we focus on the top of that funnel? The people that have the least amount of resources to buy the house, that are the most sensitive to interest rates, are most sensitive to pricing, and how do we help them? Because that's where the biggest need's going to be. Is you make the point, we can build $1 million houses all day long, but there's just at that point in the funnel, there's a whole lot less buyers.
Yeah, certainly. Yeah. I gotta imagine there's been a trend. We've all seen a trend towards smaller homes. When I was growing up, they were building 3,000 square foot homes. And then that came down to 2,600, 2,200 square foot homes. And now we're at somewhere around 1,500 square foot homes. I mean, is that the market you're serving? Because it seems like everybody's going there.
We do quite a bit. Our smallest home is just over 1,200 square feet. Our largest is 2,800, but most of what we're selling is that 12 to 1,800 square feet. Most people want to have a big home. Most people want to have a fancy kitchen. Most people want to have a fancy master bathroom. And the reality is a house is a box of compromises. What is it that I can afford? And so what do I have to give up? And square footage is oftentimes one of the things that they're having to give up because I just can't afford. I would love to have a 3,000 square foot house, but I can't afford a 3,000 square foot house. Therefore, one of the compromises is maybe I'm getting a 1,500 square foot house.
Yeah, no, I absolutely agree with you. I'm just curious. I look at a lot of different things, all things macro, and I came across a statistic a couple of days ago relative to family size. There are just many more single parents out there today with one child. And I'm just wondering, I'm just looking into the future and saying, are these single family homes eventually going to become like 900 square feet for them to become affordable?
I think that's a real possibility. One of the trends we're seeing now is there's no doubt family sizes are smaller. There's no doubt we're seeing more of a single parent and one or two children living with them. And that's all real. And that does affect things. Part of what we're seeing too is from COVID, more people are working from home. So we're seeing people want more bedrooms. So it may be that it's me and my son in the home, but I need another bedroom because that's where I office because I'm working from home 3 to 5 days a week. And so we're seeing more of that. Thus, we're seeing maybe the bedrooms are being a little bit smaller as a result, because I need more bedrooms to have that home office.
And so I want to take a pause because I just want to bring this forward for the viewers, for the listeners, right? A lot of the folks that listen to this, to my podcast are in real estate, multifamily space, single family rentals, things like that. And so the stuff that you're sharing is gold because that's where we need to position as investors. We need to be looking at that and saying, do I want to buy this multifamily that is just comprised of efficiencies and one bedroom apartments? Maybe that market demands it. But when you're looking at this new environment today, where a lot of people are working from home and need a second or a third bedroom for a home office to be able to do things like we do, right? Where I'm in my home office, I'm recording this. You're most likely in yours, right?
Yep.
This is where we are today. And so as investors, we need to be aware of these changes of this environment. And many of us are, but it's good that you're coming on and you're solidifying these thoughts for us because it's very important because we're putting big dollars behind our investments here. So I'm super curious as well. Trump just got elected for his second term. And we have this red wave coming at us. So some think that's good, some think it's bad. And it's not to be political. I'm not necessarily a political guy, but we have to look at that and we have to pay attention to that because that is a big deal with this red wave coming at us. What do you think it means for things like opportunity zones? Are we going to have more creation there? Low-income tax credits? Are we going to have this whole thing about tariffs? That is really concerning a lot of folks out there. There's also this mixed bag of whether tariffs are good or bad. So I'd truly like to get your perspective on this red wave that's coming towards us and how are you preparing for that?
Yeah, I think it's interesting. Regardless who was the next president would create new opportunities. And so now we know it's going to be Trump. So now we can start guessing on what those opportunities are going to be. But Harris would have created different opportunities. There's always opportunity. You just need to be looking for it. There's a lot to unpackage that you just talked about as it relates to things that Trump is advocating. The tariffs, I understand exactly what he's saying, and it'll be interesting to see if they implement the tariffs, what it does. Because we can look back in 2016 when they implemented tariffs on Canadian lumber. And the reason for that was the Canadian lumber was heavily subsidized by the government. Therefore, the thought is we need to level a playing field because our lumber producers in the United States were at a disadvantage because they aren't subsidized by the government. So they put those tariffs in. Well, the interesting thing that happened there is the Canadian lumber company started buying all the lumber companies in the United States. So today we have significantly more lumber companies owned by Canadian companies than we did in 2016. And that's how that happened. Now, as we look at the historical, there was a period of time lumber prices went up dramatically after those tariffs because a good chunk of our supply was no longer coming into the United States. Well, solutions were found, it was stabilized, and Canadian lumber suppliers came in and said, we're going to start buying mills and we're going to produce it here. Now, you can say that's a good or a bad thing. It created jobs in the United States instead of Canadian jobs. We've got a surplus of actual timber in the South that people started growing 30 years ago, and now it's time to mill it. And so we've got all that timber that now can be utilized, but there was some pain for a period of time that we had to go through. So it'll be interesting to see if there's tariffs across the board on everything coming in, how is that going to affect things? And they've also talked about the opportunity zones you brought up, of renewing those. Well, that created a tremendous amount of investment opportunities for people. Well, those are starting to expire. They're coming to an end. They don't make much sense to invest in them today because of the timeline. However, if they renew those, if they expand those to other communities, that's going to create some fantastic opportunities. We built in an opportunity zone in 2018, and it was fantastic. And so it's going to create some new opportunities for some communities that need reinvestment. It's going to help build them up. So I'm excited about the potential of the opportunity zones if that were to be expanded. I'm excited about, hopefully they cut spending. The driver to inflation is spending, government spending. And we've had tremendous inflation over the last 3 to 4 years because we've had tremendous government spending over the last 6 years, which is driving that inflation. And if you look at every recession, construction is the first in and first out of every recession we have. And so it'll be interesting to see. Trump is a big fan of real estate, obviously. That's where he's made most of his money. And he knows this principle. He knows that construction's first in and first out of the recessions. And he also knows that opportunity zones will drive construction as a potential. So it'll be interesting to see what they come back with and what they do, because it could create some tremendous opportunities. There's going to be opportunities. I think the key is for all of us, let's really be in tune to what's going on and grab them when they come.
Yeah, you touched on something so important there, and we've been saying it in various circles. When you have a problem in a country, and our problem is affordable housing, what better solution than to have a real estate developer as president? He's the guy who understands these problems, how to get past them, how to use different levers to solve these sort of problems. He has the knowledge behind this. I'm not saying like he's going to make all the right decisions, and I'm not looking to make this political. If Harris came with a real estate development background, I'd be saying the same thing about Harris, right? But she doesn't. So I just look at it and I say, who better to fix this problem of housing affordability? This deficit of 4 million homes, let's say, potentially as much as 7 million homes. Who can fix this deficit better than somebody who's been a real estate developer all their life?
Yeah, and it's interesting. He has publicly come out and said he's learned a lot from his first term, that he wasn't an insider. He didn't know who to put on his cabinet. He didn't know who could help in different ways. I love there was some level of humility to that I appreciate. I made some mistakes, and I'm hopeful he's learned from those mistakes. I was with RFK last week, and we were talking about that. And RFK is a perfect example. He's building a coalition, bringing in RFK, who's really got some really deep experience in certain aspects. And so he's leaning on him to help form policy on that. And you see a lot of him doing a lot of that. And RFK, by no stretch of the imagination, is conservative.
Yeah.
But yeah, he said, here I see some talent. Here I see a guy that can help us achieve what our end goal is. And so if he continues to do that, this could be really beneficial to trying to figure out how to solve for affordable housing.
Yeah, and I think you're spot on with all of us in real estate. I think now's the time to be more in tune to what's happening, not just at the federal level with tariffs and taxes and tax breaks and opportunity zones, not just at the federal level, but also getting involved at your local level, right? Your state and your town level, to see what those politicians in those towns are doing there, because they will, I can attest to, and I'm sure you can too. You've probably been to meetings just like I, where we all come together and they're very much all ears in terms of how to solve problems.
Yeah. I'm based in Minnesota, and 2 years ago, the state legislature had a bill that would make it illegal for an LLC to own a home. And it's like, oh my goodness.
Yeah.
But I read the bill and it's like, wow, this is going to have huge effects. So I went and actually testified in front of 3 different committees about that bill, and they were receptive to it. The interesting thing is I told them the consequences of the bill, and they said, oh, that's not the intention. And so I had an opportunity to help them understand what the consequences would be, and they completely rewrote the bill. Now, I don't support the bill that ultimately passed this year. I'm still opposed to it, but it's a much better quality bill as a result. And they were receptive. They listened to it. They changed the wording in the bill. They improved upon it. And that's what it's all about. I don't think we realize, just as an everyday citizen, how much influence we can have in city councils and in county commissions, in state legislature, because generally speaking, I was on a city council for 4 years and nobody shows up. And so if you show up, you're one of the few, and which then gives you quite a voice.
Absolutely. Absolutely. No, you're absolutely right. So I encourage the viewers, the listeners, if you're in an area where there's a need for more housing, more either single family homes or apartment housing, whatever it is, multifamilies, get involved. Right? It's us. Yes. It's we the people, right? It's not, don't expect Trump to fix all these problems, right? Don't expect RFK to fix all these problems, right? I mean, at the end of the day, they have more global issues. They're going to have to be working, right? Let them go work that. Let us, at our level, go work it at our towns and cities and try to influence some change. So I think that's super important.
Often it's the local level can have the more dramatic effect. It's the city level that's telling you they want very expensive siding or very expensive shingles or lots of landscaping. And often it's your local level that can have the bigger effect on the affordability crisis.
Yeah, I think they're going to be more receptive going forward.
Yes.
This is a problem we all have to fix. I don't care if you lean left or right. It's a problem affecting all Americans.
Yes.
Republicans, Democrats, liberals, libertarians, I don't care. It affects us all. So we all have to be involved to fix it. It's a participation sport at this point.
Yes.
So we have to participate. So this is great intel. Again, just super. I'm just trying to get to like, what is somebody else seeing in the real estate environment and all of this, but not just from a political standpoint, some of these changes we're going to hopefully potentially see, but also from like boots on the ground, right? What are you seeing in your own company, like in terms of the size of the house, affordability issues? Like, I mean, this is all very important intel for us. One area that we constantly rub up against is, as real estate investors, is where to invest. Right. And so when you go off and you build your 1,500 homes, that's a significant investment, not just of your own money, but also of your investors' money. And if you're like me, which I'm sure you are, you probably treat that investor money more critical than you do maybe your own money, because that's a very, very important thing to honor your investors. So how do you go about choosing locations for development? Do you go by, and I'm sure you look at a bunch of different things, but I'm just curious to hear like demographics, business, startups. What are you using these days to help you, and what can help other people who are listening to this to try to figure out how do they find a location to invest in?
The most important is understanding that market and what's going on. So we had an opportunity to buy a modular home project that has been existing for years. It was emailed to me. Now we get these all the time, and I pull it up. It's in Nebraska. So I look at it, and the first thing I do is I just go and look at the demographics of the city. Well, the city is a population of 30,000, and it's 5,000 less people than it had 20 years ago. Well, okay. If it's going to continue to shrink, that I don't see any opportunity that there's going to be new economic development, new jobs. And so we passed on it. We didn't look at it serious because I was able to make that decision in a matter of 3 minutes. Yeah. But that's where you've got to start, is what's going on there? What kind of job creation is happening? Because it's jobs is what makes the population grow. If there's no jobs, people don't stay wherever you're going. When you're in a larger city, then we're looking at, because if you're anywhere around a larger city in one of the suburbs, they all have opportunities. But then a lot of the consumers are looking at, what are the school districts? People want to go where their kids are going to have a good schooling experience. And if you're specifically a first-time buyers, that's pretty important, because if I'm a first-time buyer, either I have some young kids or I know I will, and making sure I've got decent schools is really pretty important. So those are some of the high level. We go through an exercise internally that when we're looking at a project, I will randomly assign somebody, say, all right, Tony, I want you to argue in favor of this project, and I'm going to argue against it. And we might midway say, all right, Tony, now I want you to argue against it. I'm going to argue in favor. And then when we're done, if we don't have, it's really easy for us in real estate and entrepreneurs to come up with all the great things why we want to do a deal. We're all a little bit too optimistic sometimes. And so that's the easy list. But if we don't have a really good list of why we shouldn't do the deal, then we don't know everything. There's something big we're missing, because there's always a reason not to do a deal. There's always multiple reasons not to do a deal. But when we get done with that exercise, we ask ourselves, can we live with the downside? If we're at that point, we can always live with the upside, or we wouldn't have gotten that far. So that's an easy one. Yeah. But can I live with the downside? And if the answer is no, we don't do the deal. We move on.
Yeah, and I love that approach of having two different people kind of do the pro, one do the con, because it's easy to drink your own bathwater with some of this stuff. I, like you, I look at different deals. I had one a couple of months ago come to me in a certain market, and I just looked at my first go to on that particular one. It was a big metro market. I said, show me the permits, the starts and completions. And there were like 100,000 completions coming to market. And the absorption rate was just such that I just couldn't justify buying something and doing a value add project when there were 100,000 new units hitting the doorstep that were going to be Class A, that were offering concessions.
That is such a good point that people should be aware of. I mean, that's something I didn't even think about, but we passed. I mean, you look at the Minneapolis market, the Denver market, the Salt Lake market. I can name several that their apartment vacancies are going up very quickly because they've overbuilt too fast. There was such a pent up and demand and such a need, and then they built too many. And now we're seeing some of these cities that had virtually zero vacancy rates. We know there's always a vacancy rate because the time somebody leaves, I got to repaint, clean the carpets, put somebody in. So you're never zero, but in effect, they had zero vacancy rates. And now all of a sudden, some of these cities are seeing 7 and 8% vacancy rates, which are huge.
And not just 8% vacancy rates, their rents have gone down.
Yes.
Like, you look at the city of Austin, and not to pick on Austin, I mean, it was like the poster child for years in terms of like where to invest. And now look at them. I mean, they're having higher vacancies. They're having struggling to keep their units rented. They're coming down on rent prices. But like you said, doubling back to what you said, there's always opportunity. So there may be some, I'm not saying Austin, don't invest there, but be very careful, right? If you have an opportunity to pick up a nice investment in Austin and take over somebody's 3% loan for the next 10 years,
do it.
That may be very attractive, right? So I'm not saying don't invest in Austin or any of these. You just got to be like super particular and really do, like you're saying, Dale, right? The pros and the cons. I love that because even in the cons may surface an opportunity where you can say, if we exploit that con, we may actually be able to make some decent money if we turn it around.
Yeah. And as we as a company are expanding for more of a national footprint, another thing to consider is if I see an opportunity in Austin that makes sense, I'm going there. I'll be on the plane this afternoon. Let's go. Let's do the deal. But we're not proactively looking for deals in the Austins of America because so many people, Austin has been an amazing opportunity for a very long time. Job growth has been incredible. Lots of major players. But what happened is all of us in our exuberance ran to Austin, started buying everything up, started developing, and now it's overbuilt a little bit. And so versus going to the Austins or the Phoenixes or the Salt Lakes or the Dallases, we're looking at it going, well, where are the opportunities? Because there's opportunities in every market. And so where are the opportunities that we're not competing with the other million people that all said, let's fly to Austin this afternoon?
Yeah, you're so right. Real estate is local. I know so many folks who like, hey, Tony, I want to get into real estate. And I'm like, well, just don't go crazy. Don't be looking at all these other markets, the Carolinas or Texas or Alabama. Like, just start local. If you're looking to start local. A market, chances are what's happening in your town, in your state, if it's growing or shrinking, you drive it every single day. All right. So, I mean, there's so much value in that.
You're talking to the other parents that are standing at the edge of the ball field while you're watching your kid's soccer game and hearing why they moved there and what's going on in their employment. And you've got more of a pulse on the real estate market you live in than you realize because you're seeing it real time. And all of a sudden you can start putting that together. Whereas if I go to a new market, I don't have that same perspective.
No, you're so right. And so it's great that you and we come on here, we're talking heads, we talk about we talk about what we know, and this is great. Hopefully there's a lot of value here being generated for the audience. I think so. But I also want the audience to realize they have a tremendous value too. There's a lot of stock that they have that we don't have. You're talking to other parents. And I mean, they're driving around, they're seeing from their school board if they need to build a second school, a second elementary school, a second high school. That's something I may not have. That's super valuable to know. If there's more kids, chances are there's more families, there's growth, there's jobs, everything follows, right? I talk a lot about like the population pyramids, and that's one of the things I go to look at a particular town. It's all data through the census, so it's factual data. You just go there and you take a look at the particular town you're looking at. One chart I was looking at, I sometimes gravitate looking more at the 10 to 15-year-old category. And folks will be like, why are you looking at 10 to 15-year-olds? Well, they're going to be my renters in 10 years. So if I'm going to be in this project for a projected 10 years, 15 years, like I want to know that those 10 to 15-year-olds, they're going to be the 20 to 25-year-olds who are going to be my renters, and I need to make sure they're there. But if the pyramid is doing this and is becoming less and less 10 to 15-year-olds, maybe I don't want to be in that market if it's shrinking. So there's a lot of different ways to kind of slice and dice this, and it's out there. You shared some ideas, I shared some ideas, and I'm hoping this really helps investors kind of look at things different ways when they're looking for ways to invest. Now, Dale, I would be remiss if I did not ask you how, for folks who want to get in touch with you, learn more about what you do, maybe learn about your real estate syndication, how do folks get in touch with you? Because you've been super valuable here today, wealth of information. How do folks reach out to you?
To me specifically, LinkedIn is a great place. I'm very active on LinkedIn, Dale R. Wills. To see what we're doing, new adventures we're in, syndications we have, projects. Centra Capital Partners, CENTRA, Centra Capital Partners is a great place to see what we've got going on.
And it is. I went to your website. You have a lot of information on projects you guys have completed, a couple that you have coming up here. Wow, a lot of good information there. So, Dale, I want to really thank you for being here today. You've really added a lot of value to the audience. And so thank you for being on with us at Dirty Boots Capital.
It was fun. Thanks for having me, Tony.